Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are. And this is Tuesday, the 20th of December, 2011, just after 4 in the afternoon. The stock market and the aftermarket's up a little bit, but keep in the back of your mind, you saw a 300-point gain in the Dow today. Gains everywhere in these indices. It was a Tuesday reversal day, but I didn't expect that big of a gain on absolutely no news. What news did you have? Nothing new happened in Europe. Instead of a $200 billion stability fund, they are getting $150 billion. I don't call that bullish news. Good news did happen in Spain today. Short-term interest rates went down from when they had their last auction of over 5% to 1.74. So that is big news. And that stability, I can understand, came into the euro and offered the euro some good news. The gold was up about $17 on that as traders put back on their risk-on trades and sold off the bonds and the notes. And you can see that right across the board as well. A lot of this, and I know you know it, is noise going into the Christmas holiday as traders are starting to now wind down their trading, and they'll come back right after Christmas for a few days, then they'll get ready for the new year, and then the trading starts anew. It all happens so fast you don't even know what's going on. So we've gotten a little bit of a bounce in the gold. I wish I could tell you I didn't expect it. I do expect it. And the reason I expect it is because I'm expecting the market to get back up and challenge the July 31st close of 1621.70. I said it when the market was down into the 1560 area. I haven't changed my opinion today, and today you got to 1620.80. I don't think the market's going to run very dramatically at this point, but this is the number or the zone that I expect the market to be at or higher than by December 31st, and I've been writing about that since when? The end of July. I've got all my gold reports I can show you. So for traders, and there's been opportunities. This has not been a bad year for gold traders. If they bought the market, kept this in the back of their mind, there were numerous ways to play it. And yes, the market did peak out recently at $1,800 again. We know it peaked out at $1,900 an ounce earlier. So this decline, it's in place. Longer term, you know, I don't see gold going anywhere in the near term dramatically, but I can make an argument that next year, 2012, as the printing presses get going in Europe and the interest rates from the European Central Bank drop, not go up, and as America's economy improves, there's going to be that inflation talk, and I think gold can come alive again. So, no, I don't think the market's over by a long stretch, but you can't argue. This big decline took the traders out of the market. You're in a downtrend. You're under the 18-day average of closes. This is the first bounce you've had in almost a 200 drop from 1760 straight down to 1562. So to get a rally here of a third or half of that, to get a $50, $80 rally, it's not a big deal. So far you've rallied from the low approximately, what, $60 or so. You're coming into that first area where the market might have a little bit of problem, and there's an awful lot of resistance waiting for this market should it be able to get back into the 1680 to the 1720 zone. So I'm not looking for much beyond that. Could it rally here? Yeah, it could. It depends what the argument is and what the appetite is for gold at the end of the year. It's still one of the year's best gainers. Don't lose sight of that. Getting under a Bollinger Band, you know what I told you as you were falling. The odds of staying under a Bollinger Band, or for that matter, over it, 2.5% of the time. It's like going to Vegas and betting 97.5% of the time against yourself. The people that sell into these or buy into it up here, no. These are the areas. I don't care if you say, well, if I had just held down, I was fine anyways. I've seen where that doesn't work. I've seen where you come down for these numbers like you did there and there, and you turn away and you don't test them again. Bollinger Bands are an area where, to me, that means if you're bearish and the market falls to it, it's a lighten me up area. If the market rallies up to it and you're bullish and you've got your bull position on, you lighten up again. You have to take up all your positions, but you certainly move your stop orders down with it. And you pay close attention to what the stochastics are doing. In this case, the stochastics don't have the downside momentum to revert and do what's called an embedded stochastic. That's lock into the bear trend. They're also just staying oversold, so this rally is not getting that zip that you'd like to see where you can get up to that 18-day average. You need that red line to really turn up and over it, and the market's just not getting it. In the silver market, when you got under the Bollinger Band, the warning I had for everybody was I think you'll get back over it and start riding it. I haven't changed my opinion. You have to take up 29.93 to get me to say, aha, the market's completely neutralized its downtrend. Now you're at 29.53. That's only 40 cents away. It could happen, but until it happens, I stay with the idea that the market's still bearish with a caveat. The stochastics are at 21. If they were under 20, I'd be a super bear here. They're at 21. 21 means they're just oversold. It's a place not to be. Copper market. Copper already did something important. Well, first let's start with platinum. I keep saying this. I have them in a different order on my chart. Platinum got to 1437, which took out the 1432 level. You now got a high that is higher than a previous high and a break low that is higher than a previous one. Number two, you closed up and out of the embedded stochastic. So I would not be surprised now to see the market make a run for the 18-day average of closes where that number will drop a bit each day. It's right now $14.96. It'll probably drop $5, $6 tonight, but prices and that to get together over the next few days. So I think the bear side of this market has run its case. Like we once showed in cocoa, these are the type of trades you try to catch while markets are going for you, and there's a point where you come out of them, and I call this the come out point. And no, I'm not telling you to buy. I'm telling you this is where I think the come out point on the short side is in this market. In the copper market, what you've done here is you never had the embedded stochastic. You just got oversold. Today's high got higher than a previous high. So what we have in a market now is the swing line is up because you got highs that are higher than previous highs and break lows that are higher than previous lows. But see the red line, the 18-day average of closes? You're under it. So that means that filter is saying, it's nice that that's happening, but do nothing in the marketplace. And that's exactly what I see. This is a do nothing in the marketplace. For those of you that do nothing, I have something for you. This is Christmas. I want to give you all something, and this offer won't last forever. If you come to our website, www.iraepstein.com, you'll see here about our mobile sign and pick up. But that's nice, and that's how you get our futures trading kit with these charts and everything else that I've got, our market information. But there's another thing I want you to get. Come up here to register and click on register, and I don't want any money from you. I want you to leave the word free trial for 30 days. End of 30 days, you'll decide what you want to do. I don't want a credit card from you. I don't want a billing information from you. But I do want you to fill out your real name, your address, and all this other information that you'll be requested for. Change your password where you can choose what you want through here, your business numbers, your phone numbers, and so on. In order for me to give you free real-time quotes, this is what is required for me to do it for the CME group in Chicago. If you don't want to do it, fine. You don't even have to have the product. Nobody's breaking your arm. But if you want this, you're going to see things that you haven't seen. Streaming, number one, videos. You've got my videos in there, market commentaries, oral commentaries. There's a number of us that are putting them out right now. My personal research will be up and working up probably this week on a number of it. Order entry will start next week or right after the first of the year is probably the way to say that. So my clients, they're out at dinner and they want to do something, they're going to be able to look in the market, and if they want to get out or get in, they're going to be able to click it, look for the message, the return that it's done it, and they'll be able to trade. Is it the ideal way to trade off of your smartphone? It isn't. Here's a caveat. You never know where you're walking and you lose a signal. Your PC operates different than your cell phone. I think you know that, and if you don't, be aware of it. But you can always look into your working order section and see your order. Did it make it through it? You can always use your phone to call the trade desk. Hey, I have a question. Did it do it? We haven't even turned it on. I'm not telling you these problems are there. But I know how cell phones work. Doesn't take a genius. They're not the most reliable instrument to trade off of at this point. A landline is always the best thing that you could have. All right. Here's the corn market, and I told you the other day that I was looking for the corn to make a thrust here. You took out 601.5. Therefore, I'm still looking and we're pretty close to 611.5, the Bollinger top, where you run out of your upside momentum. Here's the wheat market. 608.75 is the high, and you close basically right by it. Once you take out 609, which I'd like to see, then the market's going to revert to a market that on breaks, I think it's going to be a buying opportunity again. So with that, I want to wish you all a good evening. I will talk to you tomorrow, same time, same place. You have a good trading day.